What does it take to become the world's first trillionaire? Not a billionaire, not a tech mogul, but a man with more wealth than most nations combined. At the center of this trillion-dollar storm stands Elon Musk, the CEO, the engineer, the enigma. And behind him, Tesla, a company no longer defined by cars alone, but by ambition that reaches far beyond the road. This isn't just another corporate bonus. It's the most controversial, record-breaking compensation package in history. One that could, quite literally, bend the rules of capitalism. Unveiled with surgical precision by Tesla's board, the new plan pegs Musk's rewards not to modest growth, but to milestones so massive they make Wall Street blink. Targets involving AI, robots, global dominance, and yes, trillions. But why now? Why this package again? Just months ago, a judge in Delaware struck down Musk's previous $56 billion payout, calling it excessive and flawed. Many thought the battle was over. It wasn't. Tesla came back swinging, and this time, they've doubled down. This episode dives into the numbers, the risks, the fury, and the future. Is this an act of visionary reward, or the most expensive power play in corporate history? The countdown to the vote has begun, and the world is watching. Forget about a paycheck. This isn't a salary. There's no bonus, no annual raise, not even stock options in the traditional sense. What Tesla's board proposed is a ticking time bomb of performance-based equity. Elon Musk's new pay package, if approved, could exceed $55 billion in value over the next 10 years. But here's the catch. He gets nothing unless Tesla delivers results that many on Wall Street still call fantasy metrics. The structure. The package is made up of 12 tranches of stock options, unlocked only if Tesla hits staggering milestones. Market cap targets rising in $50 billion steps, starting from $650 billion up to $1.8 trillion. Revenue and adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization, goals that stretch into unprecedented territory. All must be achieved and sustained over multiple quarters. If Tesla fails, Musk walks away with zero. If Tesla succeeds, he walks into the history books. Not a first, but definitely the largest. We've seen massive CEO compensation packages before. In 2011, Tim Cook was granted stock worth nearly $376 million over a 10-year plan at Apple. Jeff Bezos, though famously frugal on salary, saw his net worth skyrocket due to Amazon's stock performance. Steve Jobs, during his second tenure at Apple, received stock options worth hundreds of millions, tied closely to innovation success. But none of those came close to this scale. Musk's package could be the largest in corporate history and the first to cross trillionaire territory, all if the market agrees. The risk factor. This plan doesn't guarantee Musk anything. He's betting on Tesla, and Tesla is betting everything on him. But with global markets volatile, regulatory pressure mounting, and competition rising, will this plan make Musk a trillionaire or break the mold of corporate accountability? The numbers aren't just big, they're monumental. To unlock Elon Musk's full pay package, Tesla must climb a mountain steeper than any company in history. Let's break it down. $8.5 trillion market cap. That's not a typo. Tesla currently hovers around $800 billion. To reach $8.5 trillion would mean surpassing the combined market cap of Apple, Microsoft, Amazon, Google, and Meta combined. It's nearly 10x Tesla's current size. Wall Street calls it science fiction. Musk calls it the plan. 20 million vehicle deliveries annually. In 2023, Tesla delivered just under 1.8 million vehicles. To hit 20 million, Tesla must outdeliver Toyota and Volkswagen combined, and do it while battling supply chain issues, EV market saturation, declining consumer demand in key markets, and rising competition from China's BYD, now the world's #1 EV maker by volume. That's not a bump in the road. That's a wall of steel. 1 million Optimus robots. Tesla's humanoid robot project, Optimus, has been teased in public demos, but remains in early development. The target? 1 million units in production, at a time when no commercial humanoid robot has even entered mass market. Its innovation meets imagination. But will it meet revenue? 10 million full self-driving subscriptions. Tesla's FSD software is under constant scrutiny. It's still in beta. And globally, regulators are pushing back. Germany has banned certain terms like autopilot. The US NHTSA continues investigations into FSD crashes. China is introducing AI and data restrictions that impact software rollout. And yet, to meet targets, Tesla must onboard 10 million subscribers. Can they convince customers to pay $200 a month for software that isn't legally autonomous? $400 billion in EBITDA. That's more than Apple, more than ExxonMobil, and 4 times Tesla's 2023 figure. It's not just growth, it's supercharged reinvention. The verdict? The roadmap reads more like a sci-fi screenplay than a business plan. But this is Elon Musk, the man who built reusable rockets, drilled tunnels under LA, and turned Twitter into X. So the real question isn't, can it be done? It's who else would even dare to try. The year was 2018, when Tesla's board approved what was, at the time, the largest CEO compensation package in corporate history, potentially worth $56 billion. Elon Musk didn't blink, neither did most of Tesla's fans. But one place did: Delaware. And the ruling that shocked Wall Street fast forward to January 2024. A Delaware Chancery Court judge, Chancellor Kathleen McCormick, delivered a thunderous blow. She nullified the 2018 pay package. Her reason? The board process was, in her words, deeply flawed. She argued that the Tesla board had failed to act independently, that Musk, as both CEO and a dominant shareholder, effectively controlled the negotiation of his own deal. The ruling wasn't just about money, it was about power, and whether any one man should be allowed to rewrite the rules of executive governance. Insider control and conflicts of interest. Let's break it down. At the time of the deal, Elon's brother Kimball Musk sat on the board. Other directors had close business or personal ties to Musk. The pay package was drafted by a group seen by the court as anything but independent. And though it was approved by shareholders, the court found that Tesla had withheld material information that could have impacted the vote. Translation: the vote may not have been as fair or informed as it seemed. Lawsuits and activist pushback. After the ruling, public shareholder lawsuits flooded in. Activist investors slammed the deal as a symbol of corporate overreach. Some demanded the board claw back shares already granted under the invalidated package. Others went further, calling for board resignations and pushing for Tesla to relocate its incorporation away from Delaware. Elon's response: he took to X, called the ruling fundamentally wrong, and then asked users if Tesla should move its legal home to Texas. The vote? Overwhelmingly in favor. A flashpoint in corporate America. This wasn't just about Elon. It reignited the debate over CEO power, shareholder rights, and whether modern governance can keep up with tech titans. As Tesla now seeks to revive and re-vote a new version of the deal, the backlash continues to build. And all eyes are back on a courtroom in Delaware, where billions and a legacy hang in the balance. November 6, 2025. A date that could echo far beyond Tesla, a date that might reshape the rules of modern capitalism, because on this day, Tesla shareholders will vote, not just on a pay package, but on a vision. The vote, round 2. The vote is simple on paper. Reapprove Elon Musk's performance-based pay package, now revised, reframed, and resubmitted following the Delaware court's ruling. But what's really at stake is much more complex. Loyalty versus governance. On one side, you have the Tesla board, still heavily stacked with Elon's longtime allies. They say this package is critical, that without it, Musk might walk. They're not bluffing. Musk has hinted repeatedly. No deal, no AI, no Optimus, no Neuralink synergies within Tesla. It's not just compensation, it's leverage. On the other side, shareholders, institutional giants, retail investors, proxy advisors, legal watchdogs, and they're asking, are we voting to reward performance or to rewrite accountability? The Musk effect. Elon Musk doesn't play by traditional rules, and neither do many of his fans. Tesla's investor base includes millions of retail shareholders, many of whom bought in not because of the fundamentals, but because of their belief in Elon. This isn't a typical corporate vote. It's a referendum on a personality. Precedent in the making. If the vote passes, what message does it send to other CEOs, to boards, to democracy in business? Are we entering an era where charisma outweighs checks and balances, or is this simply capitalism evolving in real time through a new kind of leader? The answer may lie in the outcome. November 6th. More than a vote, a turning point. $1 trillion. That's 12 zeros. A number so big it barely feels real. And yet, if this package goes through, Elon Musk could become the first human in history to hit that mark. But before we get lost in the headlines, let's separate the hype from the reality. Will Musk really become a trillionaire? Let's be clear, Musk isn't getting a check for $55 billion tomorrow, nor is Tesla wiring him money overnight. What he's getting, again, are stock options. Rights to buy shares at a set price, if Tesla hits certain performance milestones. He only profits if the company's value skyrockets, which means no performance, no payday. And even with performance, those shares vest over time. They're subject to taxes, legal restrictions, and SEC filings. This is a long game, not a lottery. Vested, but not liquid. Imagine being worth $300 billion, but not being able to spend most of it. That's Musk's reality, and what this new package would expand. It's wealth tied to Tesla's long-term growth, not to a bank account. So when media outlets say trillionaire, what they mean is, on paper, at least for now. Perspective, $1 trillion, 91 nations. To put things into perspective, if Musk crosses that $1 trillion threshold, he would personally be worth more than the entire GDP of countries like Switzerland, the Netherlands, Saudi Arabia, and 87 others. That's not just wealth. That's sovereign-scale power. And it's not just about personal gain. Such concentrated wealth raises serious questions about inequality, influence, and the future of democratic capitalism. So, is the trillionaire hype real? Yes. And no. The number may be symbolic. But the implications? They're anything but. This isn't just a story about getting rich. It's a story about what it means when one man's wealth can move markets, shape industries, and challenge global norms. What happens if the vote fails? If the $55 billion pay package is rejected and the world's richest man walks away from Tesla? It's not just a what if. Musk has floated it, loudly, publicly. In May, he hinted that without the package, he may take his most advanced AI projects, like Tesla's Optimus robot and full self-driving efforts, outside the company. The leverage of intelligence. I am uncomfortable growing Tesla's AI without having 25% voting control, Musk posted on X. To him, this isn't just about pay. It's about control, influence, and the direction of AGI development. And if that control slips, Musk has options, from starting a new AI venture to moving the best engineers over to XAI or even integrating them into SpaceX. Fractured vision, or a liberated Tesla. For critics, this is a threat. For fans, it's a warning. But there's another possibility. What if Tesla is stronger without Musk's iron grip? Could a restructured Tesla, run by engineers and boardroom pragmatists, finally focus on profitability, regulatory trust, and sustainable innovation? Or would it become just another car company, one without its chaos-powered visionary? The stakes aren't just financial, they're existential, for Musk, for Tesla, and maybe for the future of AI itself. This isn't just about cars anymore. In fact, it hasn't been for a while. Tesla's real bet? Not vehicles, but intelligence. The rise of Optimus. What began as a moonshot, the humanoid robot called Optimus, is now part of Tesla's future product roadmap. Musk claims Optimus will revolutionize labor, from factory floors to household chores. He envisions millions of these robots working across industries, performing tasks that range from repetitive labor to possibly even caregiving. A robot-powered economy, built by Tesla, owned by you, the shareholder. Robotaxis, the billion-dollar fleet that doesn't sleep. Then there's full self-driving, not just software for your car, but the blueprint for a global robotaxi network. Imagine it. Tesla cars driving themselves, generating passive income for owners. A fleet that runs 24/7. No drivers, no wages, no limits. It's not just a revenue stream. It's a transportation revolution. The AI stack Tesla's AI ambitions don't stop at robots and roads. Musk wants to build an entire ecosystem. Neural networks trained on billions of driving miles. AI chips developed in-house. Vertical integration from data to deployment. In his words, Tesla is not a car company. It's an AI company that makes cars, robots, and energy systems. But here's the gamble. Can Tesla execute all of this? Or is it overpromising on a future that's still just beta tested? Will investors buy into this new identity? Or will they demand Tesla stay grounded, quite literally, in the business of electric vehicles? Because if Musk's trillionaire journey has a vehicle, it might not be a car. At what point does visionary leadership become empire building? When a single man's paycheck hinges not on performance, but on reshaping the very structure of capitalism itself. Elon Musk is not just asking for a raise, he's asking for validation of a future where AI, robotics, and autonomy become currency. A world where Tesla is not just a car maker, but the backbone of a new industrial era, and where its leader could become the first trillionaire in history. But is this the reward of genius, or the price of unchecked power? Will the shareholders vote for progress, or pause at the price tag of ambition? Because in the end, this vote isn't just about numbers, it's about trust, timing, and the future of technology itself. What's your verdict on Tesla's trillion-dollar gamble? Drop your thoughts in the comments below. Like, share, and subscribe for more deep dives into the future of money, power, and innovation. Because the road ahead, it's just getting started.